It's been an interesting week all round, and I'm sure Pete's going to bring us up to speed. But Elliot, good morning to you.
Good morning. Hi there. Hi, everyone.
Pete, everything down okay at your end?
Everything's good in Hampshire.
You've been travelling around in your Ford Anglia, I know that. You've been across to Yeovil, you've been up to Edinburgh, you've been down to Brighton, you've been in London. Oxford, sorry, forgot that one. Give us an idea of what's going on from your side of things, Pete.
Well, I went up to Hendon, but I stupidly went by Oxford. I thought, okay, I'll go to Oxford and have a look at that, which is approximately an hour and 10 minutes from my house. 3.5 hours later, I get there. It's quite incredible. So travel for whatever reason seemed difficult. Anyway, I then went across and tracked across on the M40 and got over to Hendon. It's quite a long time since I've been to Hendon. The last time was in 1977 when I applied to join the London Police, which was really quite interesting. I applied to join the Hampshire Police, and that all went well enough. And then I thought, okay, I ought to have a look at another one of the police forces. So I wrote to, in those days, we used to put letters in post boxes. I wrote to the police, and they literally wrote back and saying, "You're in. When are you going to join?" So I thought, blimey, that's a bit forward. And I went to Hendon, and literally they said, "Well, look, do you want to start week Monday?" I couldn't believe it. They hadn't even asked me any questions at that point. They were so desperate for policemen in London that they just basically said yes. Anyway, that's my little story about Hendon.
Did you get a uniform, Pete?
I didn't know. No, I decided not to do it. It wasn't for me, but there you go.
But Hendon looks good, doesn't it? I mean, it's a huge development. It looks fantastic, even just that picture with the Goldfinch.
The development that's gone on there is absolutely huge. I've got to say that the Barratt site is extremely well run. It's clean, tidy, logical, which is all good. So, you know, if you've got clients that want to go and see what it looks like, they are going to be impressed. The formal areas are absolutely excellent. There's a lake at the back of the scheme, which you can... There's like a couple of decks that you can walk along, and you've got river frontage, or not water frontage, shall I say, not river frontage, that you can walk along. And it's got a really good curb appeal. There's also some shop units there on site, and it's adjacent to High Street. And I couldn't believe how much activity there is in Hendon. It's not just this scheme. There's Berkeley Homes are building a big scheme, you know, a couple hundred meters up the road. And LNG, and so there's a lot going on. This is a huge site, and Elliot just put me right and said there's actually 2,000 dwellings going on in total. It's 107 acres, I seem to remember.
Yeah, 107. Yeah.
It's huge. So it's got a really good feel, and of course, as Elliot would tell you all about the commutability and what have you, it's very well located.
Yeah.
So I'm going to pass that back over to Elliot, who obviously knows a lot more about the intricacies. But all I'll say is that, as one of our golden rules, it's always that I go and walk the bricks and see what I feel. And I grade everything 1 to 10. I'm really quite a simple person, and you know, I would say that this has got an 8, which is, it takes a lot to get to an 8. Many of the schemes we see fall off of our cliff because if they go less than a 5, we won't take them on. I'm not interested. So just to give you an idea, out of the last 15 projects we've looked at, we've canned 11 of them. So we don't just go taking things on just because they're there. And also you've got great assurity both with the developer and the contractors on this site. There is no risk. And I think that's really important to mention, because if you're buying off plan or physical, you need to know that the building's going to get finished. You have that assurity with Barratt's. If Barratt's were to fail, then we've all got a major problem. It's not going to happen. They're too liquid. It's a great company, huge provenance, and extremely good at what they do. So feel comfortable with the developer and the contractors.
Thanks, Pete.
Yeah, perfect. Okay, well, thank you very much for that, guys. Yeah, I'll sort of drill into a bit more detail, you know, in the project, in terms of location, sort of accessibility, what's going on, a bit of history behind it all. But just to really sort of carry on from what Pete's saying then about the partner and the developer we're working with here. You know, Barratt Homes are the largest home builder in the UK. They are a PLC. You know, they're extremely reputable brand from a developer's perspective, if not the best. So when we're working with, you know, when we're introducing our projects to clients and to give them that reassurance and on, you know, funding, on planning, and that there's going to be, you know, as little issues as possible, you can't get much better than working with someone like Barratt. So without further ado, I'll start going through the project in a bit of detail. And if you've got any questions, just if you pop them into the chat, I will be able to answer them as we go along. So do feel free to jump in. Okay, so just to give you a bit of background on Hendon and this particular site. So Hendon got heavily bombed in the Second World War. Just to the north of Hendon is an RAF and an old RAF base. So the area got very much, but bombed heavily during the Second World War. So because of that, and the area was completely depleted from your sort of traditional Victorian terrace streets, they basically built local authority housing all over it. So during the 60s, 70s, as you can see in the middle here, that this particular site was all units that we're looking at right in front of us here. So that sort of 3-4 story sort of block of duplex local authority apartments, and as I say, completely covered this site. Barratt got hold of the site in 2012 and started demolishing the site and clearing it, and to then build a complete new community within it. So that's, you know, in essence, I know we hear this all the time and we're all talking about sort of investment projects and that sort of thing, but that's the whole regeneration about it. That's where we're seeing an area of low value, and where we're seeing the value being created because you're buying in at a lower point, and to see prices go up. So as you can see now, this is what the scheme is looking like. As Pete mentioned, he's been up there. It's going to be 2,000 units in total. There are 1,000 that have already been built. So it's very much alive. So, you know, clients can go and visit it. There are showrooms, there are show apartments. We've got videos of, you know, live apartments and everything else like that. So we've got every sort of availability from a marketing sense to be able to show clients, give them that reassurance, and as I say, and even go up and visit, we can arrange for that to be done. But it's good quality. Every apartment will come with outside space. There's fantastic communal areas within it, and you're running alongside the Welsh Reservoir, which you can see just on your top right hand side. From a map perspective, and just to give you a bit of detail, so we're top left hand corner is just sort of obviously a zoomed out version of London. So you're sort of northwest London. Wembley is to your west, and to your east is so we're going across to Alexandra Park, and then Walthamstow to the further east. To the south is obviously central London. You are actually, this particular project is actually on Edgware Road. So if you were to drive straight down Edgware Road, and you've got any Middle Eastern clients, I'm pretty sure they'll all know Edgware Road very well. It's a very popular hotspot when you get central, into a more central location. So project based on this, as you see the Barratt Reservoir here, which gives you that feeling of outside space. It's, you know, within a sort of a central London location. It is really quite important. It is zoned 3, and then arguably the most important thing from my perspective is the accessibility from the train network. So you have the Hendon station, which is on the Thames Link, which runs into the city, and you have the Northern Line, which also runs obviously into the tube network, but also down into central London. When I talk about the city, I'm talking about the City of London, sort of the financial hub of the country, and you know, you're sort of into Farringdon or into Bank in sort of 50, like, roughly speaking, sort of 20 minutes or so. So fantastically well located for people from a commuting sense. A little bit closer to Hendon itself, you're looking at the likes of sort of the affluent areas of sort of like North London, and where you're going to start where sort of we're just on below the cusp of get my words out here. Hendon is just the north of the cusp of the North Circular, and then sort of within the North Circular, we start seeing it sort of much more sort of affluent areas of London. So, as I say, I've sort of mentioned this here, or I've just talked about, but these are the main points. The other thing about the project itself is it's got Brent. It's Brent Shopping Centre, which is, I think, is one of the large. Is either the largest in the UK when it was first built, but is certainly a large shopping centre which is very close by. And then all the local amenities are within Hendon itself, which is incredibly popular. Hendon is just one last one. Hendon as a location generally is sort of a traditional London suburb. It's not necessarily particularly poor area. It's not particularly a very incredibly wealthy area. It's very sort of middle class. There are golf clubs in Hendon. There are semi-detached and detached houses, a lot of which were built sort of 60s, 70s, and 80s. So there is a community there, and then when sort of you have these new, yes, Chris.
The question's just come in. Everybody loves water. Everyone loves a water view, and it's right on that reservoir. Somebody's come in with a question: is the reservoir used for water sports, or do you know? I don't know. Pete, when you were there, did you see a windsurfer?
Yes, correct. Yeah, there's a sailing club which is part of the development, and you can go paddle boarding and dinghy sailing and everything on the reservoir, canoeing, kayaking, canoeing on the reservoir.
So, I mean, it's an ideal situation because you can commute into, or our tenants can commute into London. They can also go and see the Royal Air Force Museum. They can go paddleboarding on the reservoir and go shopping in Brent Cross. You know, what else do they want?
Precisely, exactly. That's the sort of location and that side. And here we are. We're just giving you a bit more detail in terms of the tube networks and everything. Just jump that. So as you can see, so West Hampstead, obviously, 8 minutes away on the train line. West Hampstead and Hampstead Heath, incredibly affluent area of London. You are just to the north of that, and then you sort of into St Pancras and on King's Cross and further on in sort of 16 minutes. And as I say, the city is about 20 minutes. On the Northern Line itself, into Leicester Square and Bank in sort of 25, 30 minutes. So incredibly well located, and you can see it's a 5-minute walking distance to the tube line, to the train station, and a 15-minute walk to the underground. Yes.
Just another question's come in. Obviously got by car. Now London is notorious for now not having car park spaces. No, discouraging people in London for using their cars. Is the car park space at this?
Car parking. I'll have to come back to that one.
Okay, sorry. Carry on.
I mean, just going back to this point about car parking and central London, I say 70% of people don't have a car because of the accessibility to train networks and tube networks. Just to use an example of when I'm talking about, I personally had friends and things that lived and bought in Hendon previously, and they were working in the city. One was working in Investec, another working at Aberdeen Asset Management, and they bought in Hendon because of its affordability, but also its accessibility into work and and that quick connectivity. So your pool of wealthy tenants, let's say, when they're sort of it is incredibly strong because of its connectivity with the train networks. Now, going on a slightly different tact with in terms of education, as we know, we do have clients that are buying for their children who are going to university and that sort of things. So London universities are all within 40 minutes of this particular project. Middlesex, UCL, Imperial, and LSE. Again, always worth noting, always worth being aware, because as clients quite often purchasing for their children. Obviously, from our perspective, the sort of primary schools and sort of but primary and secondary education is less important, but equally it's important to your tenant pool, and that those options are available to make sure that you're not, if you go and buy if you bought a 3-bed as an investment, for instance, and you want to make sure it's available to families, you need to know that there's good schools within the area that they can send their children to, or nurseries and everything along those lines.
Can I just interrupt again quickly, because it sort of ties in with what you're saying and that screen and what Pete was saying, and the DD that Pete mentioned is obviously key to what we do. A question's just come in: what's the supply and demand like in this area, and expectations to find tenants? Thanks, Lee.
So within to add a little something on that, and it's a good opportunity to actually give a wider message. We're all completely aware that mortgage rates have gone through the roof effectively, and I think in some respects they were right to put 0.5% on yesterday, because my view is I'd have been happy if they'd have put 1% on. And why is that? Because it would have got the job done. We're suffering from death by 1,000 cuts, as I call it at the moment, and it's not helpful. Are the fundamentals of property in the UK sound? Absolutely they are. I was talking with some learned people this week. We're 2.4 million dwellings short of a picnic in this country at the moment. Now, the fact is, I'm not going to go over all the numbers because I do it every time, but we had 362,000 net migration coming into this country. But the fact is that we are awash with people and we're not keeping up with the demand. The government wanted 300,000 dwellings a year. We only delivered 180 last year. The latest reports this year that came out this last week, we're only going to see 120,000 completions in the UK in 2023. And it's not going to get much better next year. So you've got this fight going on between rents, which have risen approximately 12%, so 1% a month, every month for the last 12 months. And then you've got the capital values, which, again, please don't think that the world is nigh and we're going to see 30% drops. It's not true. It's not viable and it's not real. We may well see a softening in prices. And I've said to everybody, that softening is likely to be 10% over like a 12 to 18 month period. We're already 5% into that. There could be a slight bit of softening, but it's not going to be everywhere. And so what I've witnessed in my 35 years in property, that there are all these people that love to dramify everything. The fact is that we have a very solid proposition with property, and it should form part of everybody's investment portfolio. And I respectfully suggest that none of us are good enough to pick the right time to get in and the right time to get out. It's very difficult to do. There's only one thing you've got to do to make money in property on the right basis, which is a medium-term play, and that is to be in it. So, there will be moves. So if you said, okay, interest rates have gone up to 6%, let's say it's 6%, but then rents have gone up by 12%.
Yeah.
You've got to state all the constituent parts and add them together and amortize them and see what that looks like. Please don't just take interest rates on its own. It's irrelevant. So the fact is there's still going to be upward pressures on rents. There is a problem that we're going to get to the point of affordability with those rents. So, we are going to see a strong need for people to have dwellings and to rent them. That's all I'll say.
Yeah. And just going to that point really on sort of price growth and everything within the area itself, and Barratt being particularly strong in the regeneration sector sort of around London. This sort of diagram here actually is well timed. So the average house price increase from 2011 to 2022. So UK average has gone up 53% in that year time. The London average has gone up 88%. But this particular area going back to being a low value area, strong demand, and everything, is actually gone up 132%. So that's just really reaffirming why we look at these sort of areas. We don't just pick them out because the developer has asked us to, or anything else like that. These have got to be in areas where we see this growth, where we see the potential, where we know there's a demand. And in sort of in answer to your question about what's the demand like, there's 2,000 units in total that we built on this project. 1,000 of them are already completed and lived in, and the tenant and paying the rents and the rents being achieved. I will show you shortly. So we're very confident in terms of this as a project and a proposition for any investment purpose.
Thanks, Elliot. Okay, so next slide, please.
So just a little bit more on the project itself. So everything in purple is completed. I don't think you can see my cursor. So this is all completed in a central circle, and there's externals here. Orange is to be completed, and building work has started. And then we're talking now about these current phases, which are in pink here. In particular, we're talking about this project here, this phase here, which is called Goldfinch, which is on the corner. We have some units that are looking, and I'll show you the views out towards the reservoir. So through this break between the buildings here, and looking out onto the reservoir. So it's a well-located block apartment. We're looking at sort of directionally, if you like. South is sort of back this way. Can you see my cursor? Sorry, Chris.
It's south-southwest.
Yeah,
It's a south-southwest access, so you're going to get.
So west is this way, where we're looking at sort of Wembley, and everything else is down here. East, obviously, this way, and then north is up here. As I mentioned, you've got the canoeing and sailing clubs and that sort of things. Big open spaces, 170 acres of open spaces surrounding it, which obviously you can enjoy and walk and cycle and run and jog. Again, not really many opportunities within London, within Zone 3, that you're going to be able to do this sort of thing. So it's really positive from that perspective. As Peter mentioned earlier, got facilities on site, including shops and little coffee bars and restaurant, coffee shops and things like that, and co-op, Sainsbury's, etc. And 15 minutes walking to the respective stations, and then Brent Cross Shopping Centre just down the road as well. So well laid out site, very accessible, and very good local amenities. So there you go. So 1,000 residents have already moved in. So there you go. That's what we were saying earlier. There is a proposed school actually as well to add to the interest in it. And as you see here, 170 acres of green parkland, and the idea, and Welsh Harp. It's called Barratt, or Welsh Harp Reservoir, by the way, for sailing and water sports. This is actually a CGI, but just to give you an idea of what it will look when it's all completed. You can see it, Wembley to the west there with the Wembley Arch, and obviously here is where the particular block we're talking about is situated. And as I say, looking out towards the reservoir for some of the units. You can see your traditional sort of housing within Hendon itself, which is placed along here. The train station is like literally just where my cursor is. I think it's on here. So the rail, I'm sort of almost coming from the railway bridge with the way we're looking at this. High Street runs across just in front of the project there, and then open spaces across to your west again, to northwest as well. The tower blocks, that's yet to be built, and then obviously everything else is relatively low rise. So this is the block that we're talking about in here for Goldfinch. Again, you can just see where it's situated here, and then the views across and out this way. So it's only, well, I mean, there's two ways looking at this one. So from in your tall towers, which obviously are quite popular and are built around. We can sometimes come up against there being less lending and things like that being available. So trying to keep sort of the number of floors and stuff that we're looking at lower is always a good thing. So 10 floors in this particular block, consisting of 62 apartments, 1s, 2s, and 3s. Some of them are there's some 2-bed duplexes and 3-bed. All the 3 beds are duplexes. Everywhere has an outside space, balcony, or terrace. And in answer to your questions, I've just remembered now, there is parking. It is available. It's £30,000 per parking space.
Thank you.
And as I say, this is sort of phase 4 within the whole project, which is a really again reassuring thing from a let's take Barratt out of the equation, and just as a general development law rule. If you're sort of in a second or third phase, fourth phase of a project, and you can see what the tenants that are moving in, you can see what their rents are being paid, you can see that it's built on time, see the quality of the finish. It gives everyone that reassurance of buying off plan. And if people are serious about buying property at the moment and they don't want to get stung by the interest rates, then giving them as much reassurance to buy off plan, which will complete in a year to 18 months time, is the way for it, is good advice. But you've got to give, and we've got to give all the reassurance, and we're working with the right partners to give that. Just so as I say, these are views. So this is from sort of drone images. So this is from the 6th floor, I believe. Yeah, this is 6th floor. This is from the 5th floor. So you can see out towards the reservoir and the housing. Okay, this is
quick question that's just come in from Kieran. Obviously, we all know about Brighton. You've done fantastic down in Brighton. I know you've still got some stock down there, and also in Birmingham with Tyndall Court, both of which have what I call Airbnb style availability. Does this have the same, or is that not true? No. Okay. All right. Thank you. All right. Sorry, I interrupted.
Yeah, no problem. A lot of developments won't have it within their lease to allow sure that's an Airbnb.
No, we understand that. I just thought I'd answer Kieran's question.
Yeah. Thanks. Thank you very much, Kieran, for your question. Okay, so selection of units and the rental values. As I say, these are rental values that are being achieved in the project at the moment. Just without looking at the units and everything else like that, the thing that jumps out to me, and bear in mind, I started working in real estate in London since 2007. So I've sort of seen a lot of property in and out of London. To start talking of yields of around late 5s or 5.4 upwards in London is unique, to say the least. And so we're not. It's not just from one agent. We've got Foxtons and Benhams. So we've got from their experience of what they're achieving at the moment, and then you're even looking up to 6% on the higher floor one beds. Rents are crazy in London at the moment, or across the country, and this goes back to Pete's comment about when we're getting sort of rebuffed on interest rates and things like that. We do still have to make people aware that the rents also gone up. So these projects, even at a 6.5% interest rate, still wash their face. They may not be. They're going to be on the cash flow perspective at sort of 65-70% LTVs. Then they still work, and they're not sort of cash negative. Clients aren't sending money back to top them up because the rent being achieved is so significant. I was doing an exercise this morning, and you're sort of looking at some of them at sort of 70% are maybe just sort of 50, 60, 70 pounds cash positive per month. But then if you're at 65%, you're looking more like 100 and 200 pounds a month, which is great. That's essentially what clients want.
I'm just going to put my usual weekly health warning in there, because obviously we know what interest rates are doing at the moment, and this is a year to 18 months off plan. But always speak to the mortgage broker, and we can put you in touch with our mortgage brokers about your own personal situation, because it's all subject to status, and you just can't generalize in the mortgage market. But yeah, it's just my weekly health warning. Sorry, Elliot, I interrupted you.
No, absolutely. So so we've got a selection of apartments, 3rd floor up to the 6th floor. Floors 7, 8, 9, and 10 have all. No, so we've got units up to. I think there are other units on floor 8 actually. But 9 and 10 have all sold out. This is just a selection which is exclusively available to us. We do have accessibility to the rest of the block as well, but these are our exclusive units. Really nice little range here. 1 bedroom of about 400,000 and 2 beds starting at 530. Another nice an attractive element to working with the larger developers as well is that they only look for a 10% deposit on exchange. So for a lot of clients and cash flow and that sort of things, we're looking at if they are happy at just using a 1 bed as an example, they'll be looking at putting around about £40,000 now-ish, sort of within the next 6 to 8 weeks. And they would exchange, and then they would be expected to raise the remaining funds by summer next year. Yes, Chris.
And reservation fee?
£2,000.
£2,000 to reserve. That takes it off the market. You get that back on exchange of contracts when you send your 10%, and then the rest is paid by the mortgage on completion, which will be in 12 months to 18 months time.
Well, no, the rest plus what LTV you want. So you
exactly. Yeah, absolutely. Okay, I just wanted to clean.
Yeah, exactly. So 10% now, so as I say, looking, and on any one of these units, the client, from a cash flow perspective, would need anything between 40 and £56,000 as a deposit, and then, but obviously ensuring that they're able to access the funds by this time next year, the remaining funds plus mortgage. I think that is everything. If anyone's got any questions or want some more details, please do get in touch. We're obviously all available at RPA to help out.
Jason, got a question just come up, Elliot. Just coming from Jason Collins. Thanks, Jason. What are the costs to the investor, service charges, management costs?
The service charges are TBC at the moment, so I'll have to come back to you on that one. Management costs will be 10%. Rent, so fully let and managed service will be 10% with RPA's lettings and management partner.
Right, and it's almost always worth saying that you do cash flows for each and every one of the units.
Exactly. So if you've got clients who are interested or would like a discussion, I believe everything should be on your website. Is that right?
Yeah, everything's on the website.
So if you want to get brochures, that's something. But then if you want cash flows and stuff, or you want a more detailed conversation with the clients, all of us here at RPA that you work with, whether it either be Josh, Mike, myself, or Richard, more than happy to jump on a call, a Zoom, meet them in person, talk through in more detail. Send a cash flow, whatever needs to be done, really. But on that point, actually, what's really good as well with this project is the marketing material we've got. We've got, as I say, viewpoints, videos, marketing videos, floor plans, interactive. We've got so much available for any client, which is really, really useful.
That's great, Elliot. I can't let you go without asking how things are going down in Brighton and Hove, where Pete was last week, and his Ford Anglia.
Yeah, we still have units available within that project. It's sort of been selling very nicely. Still very popular. The short let option on that, especially with rising interest rates, is what has got a lot of investors' eyes, if you like, because we know Brighton being a very popular area within the UK for people to visit from a tourism perspective. So being Airbnb and everything like that, it is a really nice option there. So Brighton's still going well, still got some units left. So if anyone is interested, do let me know. Completion is sort of on track with that, really, which will be end of next year, Q3 next year. All moving along nicely.
And details are obviously on our website, Holborn Property Investments. So have a look there. And I'm just going to finish one more on your trilogy up in Birmingham with the Tyndall that's being on now and the 2 completed projects.
Yeah.
Birmingham continues to do well, doesn't it?
Yeah. I mean, just going back to this rental perspective, these rents, and what can be achieved is really good. So Tyndall is available. It's selling pretty well, to be honest. It wasn't the biggest out of the 3 blocks. It's the smallest actually of the phases. 1 beds now are starting at remaining are about 250, and 2 beds are now at sort of 320. As in the sense that that's what's remaining. We've probably sold 50% of the project. It's sold really well, and it's on the basis of what's being achieved from a rental perspective. So the first phase, as I say, is completed, handed over. You're looking at 1 beds that when we first sold it, we're looking at £950 a month for rent. We're now achieving, if they're fully furnished and that sort of thing, we're achieving like £1,150 a month. They're getting really big increases on those rents. And then, as I sort of mentioned earlier, if you're buying off plan, if a client wants to buy and they want to get into the property market, now is a good time to do it, which they may disagree with. But if we explain to them that interest rates are at a high point now, they will come back down within, and what we're expecting is within the next 18 months or so. But when they come back down, when interest rates come down, inflation comes down, we're going to then see the property market at the moment is sort of bubbling along and pretty static. This piece it may soften a bit. But when rates come down, because of the pent-up demand in the UK, because of the general appetite for purchasing property, all we're going to see is house prices going back up. So you can purchase something now, it's off plan, you're not taking that higher risk with the higher rates, but then in 12, 18 months time, you've bought a property that at today's value, and actually what you're probably going to find is rents won't have dropped that much. They probably will stay very similar, but rates will have dropped. So suddenly you've got the perfect storm in terms of price the property at the right price.
Can I just bring up one other thing, Elliot, and that is that if you look at the capital rent that people are paying, and we've got this inflation which is not slowing up, there's a meeting of the two. In 35 years, I've never seen rents go backwards. It doesn't happen.
Exactly.
So if in the next 2 years, let's just say it slows down to an average of 5% of inflation a year, which is potentially about right. That's 10% of your capital value that is amortized away. So I can't see rents falling. Now, rents might only go up 5 or 6% in the next 2 years. That's realistic because there'll be a plateau.
Because it jumps.
Forward. Yeah. But you've just picked up 5 or 6% on what I call the meat in the sandwich. It's really important that people look at all of the constituent parts and don't get hung up just on interest rates. It's only part of the story.
Yeah.
Thanks, Pete. Michelle, welcome to the show, and it is a show. Thank you. Question: bookbinders. What's happening there? Great option, Acton. Can you quick recap for people that haven't been on?
Absolutely. So bookbinders is in West London. It's a slightly different location, but sort of sandwiched between Chiswick and Acton. It is on a doorbell's this one. So yeah, bookbinders in between Chiswick and Acton. So Chiswick, incredibly lovely, affluent area of London. Acton is a very much an up and coming area, a very popular area of London. And being, I think it was one of the highest house price increases in London boroughs. It's between 2021 and 2022. You have got a fantastic apartment block of 98 units, which is sort of in the middle of 3 different tube stations, which means its accessibility is fantastic. District line, Piccadilly line, District, Piccadilly, and Overland. You also do have the new Crossrail, sort of 15-minute walk away as well. So really, really fantastic from a communications perspective. You've got the Wealth and the sort of overspill, let's say, from Chiswick. You know, when you're talking at some Chiswick house prices, sort of £100 per square foot, well over 1,000, and you're looking at places and bookbinders are sort of around that sort of 700-ish at the moment. So we really can see that the opportunity there for that to increase. And it does then also have, you know, not too far away, relative short walk away, the River Thames itself and the green banks that are there, and moving down into sort of Richmond and Kew and those sort of lovely areas.
Thanks, Elliot. I hope that wasn't too much information for everybody. We've got Hendon, we've gone down to Brighton, we've gone up to Birmingham.
Basically, if you've got anyone for London, we've got some great options. Come and speak to me. And Birmingham, we've got some great options.
Brilliant. Thanks very much. Thanks for everybody. All those questions are coming. I think we've answered them. Thank you very much.